Welcome to another video on my channel. I am Kadeen Shaw and I help novice and intermediate traders improve their technical analysis skills by teaching them how to chart high probability supply and demand zone. Alright, let's get started. So what I'm going to do is, as I promise you guys, I'm going to give you a market analysis on the market, the stock market. So today is August 28th. And last week, or on Friday rather, on August 26th, we have a weekly candle that closed on Friday. So this candle was the last candle from August for the week. The last weekly candle from August that closed. Now we still have the monthly candle going. We have 3 more days in August before this candle closes. But as you can see from this long wick, that sellers have been pushing price down. And I'm going to chart this chart right now so you guys can kind of see why this price started to go down and how sellers are stepping in. But before I do so, what I'm getting ready to do is to show you guys how I do my market analysis, what tickers that I use, and how do I watch the market prior to me trading. Okay, so the tickers that I use before I actually start the trading, the tickers that I watch the major indices and their future chart. So what do they look like? What are the major indices? The Russell 2000, the Dow Jones, the S&P 500, and the NASDAQ. And I also chart the VIX. So let me get ready to show you what they look like. All right, so by watching and charting these tickers, which are the major indices, it allows you to see how your underlying chart or how your underlying stock moves. So the first one that I chart is YM, E-mini Dow Futures. I chart that one. My second ticker that I use is the ES, S&P 500 Mini Futures. The third one that I use is the NASDAQ 100 Mini Futures. And I also use the Russell 2000 E-mini Futures. And finally, in the futures market, I use the VIX Futures. Now, for the U.S. market, I use these futures chart to tell me what's going to happen in the U.S. market. So the U.S. market tickers are the DJI, the Dow Jones Industrial. I look at SPX, which is S&P 500. I also look at NDX, which is the NASDAQ 100. I look at RUT, the Russell 2000. And finally, my favorite, the VIX. The VIX measure volatility in the market. So if you're ready to see me chart, get ready. I'm getting ready to show you how I do a top-down analysis. All right, if you're ready for this top-down analysis, get ready. What I'm going to do is show you guys how I analyze my chart using mathematics. And also for you to utilize it too. You can actually use what I'm about to give you right now and try to trade for this upcoming week. So the first thing I'm going to look at is the monthly time frame. So again, as I can see the monthly time frame, I'm going to make this a little bit bigger. This candle is not closed yet. There's 3 more days for this monthly candle to close. However, price opened up, and I can show you where price opened. For the monthly candle, price opened right here. And then the buyers pushed price all the way up to here. This was a high of the month. And now sellers are now pushing price down. So price is currently here. So with that being said, sellers are in control. And this long wick tells me that there's rejection from here. So because I see this long wick, sellers are in control. So what zone am I going to chart? I'm going to chart this monthly zone here that price reacted to, and it's coming down. And for my monthly zone, I use yellow to represent my monthly zone. So let me go ahead and change this to a yellow. And inside of that zone, I mark it red. Red means supply zone. This is where the sellers are. As you can see, sellers came up here, push it back, and buyers try to come all the way in, and now sellers are pushing them back down. And then I'm going to draw my monthly demand zone. The demand zone I'm looking at, or the one I've been looking at, or I have right now, is this one right here. And I'm going to color this one in green. Demand zone means that's where the buyers are. They're competing for price down here. So as you can see, this demand zone was formed back in June or January 4th, 2021. That's when this zone was formed. And price did not come back to the zone until May of 2022. So almost over a year or so. So price came down. You can see with this wick, price came down all the way down and stopped at this demand zone, pick up some buyers, and then it left. It came down again, went a little bit deeper in the zone, pick up a little bit more buyers, and left. And that's what it's been doing. So this is the monthly zone. Get ready for the weekly. All right, so this is my weekly chart. And by the way, keep in mind, today is Sunday. That means the futures market is open now. The futures market opened from 6 p.m. on Sunday until 5 p.m. on Friday. So right now, the futures market is open. And I'm going to show you in a smaller time frame. We've only been open for about an hour. I'm going to show you what's been going on in a smaller time frame. But in the meantime, I'm going to go ahead and chart my weekly supply and demand zone. Let me go ahead and chart the demand zone first. I'm going to chart the one that I like is the one down here. That's the one I had before. So I'm going to chart this one. And my supply and demand zone for the weekly, I use white to represent them. So that's my first zone. I'm also going to chart, I like this one, but I'm going to leave it for now. And then for the supply zone, I'm going to chart this one up here. This is the one I had initially. Price broke through it, but I'm going to still put it on here. And supply is going to be shaded in red. And other than that, I have, let me bring it up. I'm going to chart this one right here, which is going to be this zone here. So as you can see now, price actually went up in there. It did break through. It did break through my weekly supply zone. Buyers did push price all the way up, but it came, the monthly zone pushed it back down. So the monthly zone is acting as resistant. So now let's go ahead and look. And we have a new weekly zone form right here. So I can even acknowledge that if you want to. This is a new weekly zone. Since this zone has been broken, this is my new weekly zone now. So what you would do, you would potentially erase this weekly zone now and then chart the new one. This is the new one that was formed the past 1, 2, 3 weeks ago. So I have my new zone, my new supply zone, and then I like this zone here, which is another weekly, but this is going to be a demand zone. And I'm going to chart it. I'm going to put a stick right here or a dotted line to represent it, because I think when price comes down here, something's going to happen. Matter of fact, let me actually chart it correctly. I'm going to use my square. So I like this zone as another weekly demand zone. I'm going to color it in green. And I'm looking to see what is price going to do when it comes to this weekly zone. All right, so that's the zone I'm waiting on for the week. And again, it takes a while for the week to happen. It takes 5 daily candles for a weekly candle to form. So you can see prices going on right now. It's not really moving, but you'll see it moving in a lower time frame. So I'm looking to see how price is going to react when it comes to this weekly zone. And it may take a few days, a few weeks. And the reason why I like that zone is because of this pin right here. Let me move this a little bit. You see this little pin right here? This is called a hammer. This hammer was formed in a triple zone. And I'm going to show you why it's a triple zone once I chart the daily zone. So when this hammer was formed, I told my students, I said, you know what? The buyers are in. The bulls have been in the market. So what happened since this candle was formed, price went up 1, 2, 3, 4 weeks, 5 weeks basically. Price been going up until the bears or the sellers started to push price down. So let's go ahead and take a look at the daily. So now we're on the daily chart. The first thing I'm going to show you guys is the first daily supply zone where price reacted and actually left. So for my daily zone, I use blue. For my supply zone, and let me shade that in red. So as you can see right now on the daily zone, this daily zone that I drew, price went up into the day. It passed through my daily zone. It broke it. It actually broke my weekly somewhat, and it reacted right here from the weekly and monthly. So this was a triple zone somewhat, and price started leaving. I love triple zone because what happened with triple zone, that's confluence. So now price starting to go down. So now this daily zone is no longer valid. So what I'm going to do, I'm going to chart a new daily zone. And I like this one right here. So I'm going to chart this one as my new daily zone. So whenever price come back, I'm going to see how price reacted to this daily zone right here. And let me bring this up into the wick right here. So I like that daily zone as a zone. Now let's go to my demand zone. So initially, my demand zone that I like was this one. This was my first demand zone. And for demand zone on the daily, I go ahead and I change those to turquoise, and that's shaded in green. So the reason why I like this demand zone, as you can see, because price came down and reacted here. You can see this nice pin. This is my candle. This is my favorite candlestick formation, is this pin, these hammers, or whatever the pins are. Hammers, inverted hammers, shooting star, whatever they are, depending on where they're formed. I like these zones. So this pin right here, you can see price came down, left a little bit, and trace again. When it came down, it didn't go as deep as possible, but now this is also a triple zone. Let me erase this new one that I showed you guys, and I'm going to put it back. You see this triple zone, monthly, weekly, daily. So my best entry for this one would have been right here. When this pin was formed, this is a hammer. This hammer got formed in a triple zone. Monthly, weekly, daily. For me, that's confirmation. I'm taking this trade. And so this trade was taken, and as you can see, because this is telling me that buyers are in right now. Buyers are getting ready to push the price up. And as you can see, what happened after this, the next day, price left. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, all the way up. Price left for about 21 days or 22 days. And that's why I like these candlesticks. So when I'm looking for a trade, I'm looking for strong supply and demand zone. I'm looking for double zones are great, but triple zones are even better. And I'm looking for a pin. These candlestick formation, whether it's a pin, it can be a hammer, it can be a shooting star, it can be a doji, it can be a gravestone doji, it can be a dragonfly doji, whatever it is. That's what I look for, and that's my price signal to get in. All right, so let me show you right now. I'm going to move forward. The next chart I'm going to do is SPX, but I'm going to do it in another video. In the meantime, because the futures market is open, let me show you guys how to, let me put my weekly back so you guys can see it. So that's my new updated gray zones. This is also a daily demand zone. I'm going to chart it, but I don't really like it. I'm going to mark it, but I presume price is going to pass through, but I'm going to still mark it. And the reason why I presume price is going to pass through it because it's not balanced. It is, actually it is balanced. Let me look at that. So I presume price is going to fall through. And as you can see, price opened up literally right above it. Let me go down, and it started rejecting. So as you can see, this candle opened up and it's trying to push down, but it's trying to reject it. So let me go down to the lower time frame right now so you guys can see how price has been reacting. And before I even move forward, take note. Price gap down to open. I'm going to draw this gap right here. I'm going to make the gap red. So price gap down to open. So that tells me, okay, because price gap down, sellers are still in control. So I'm going to be looking for bearish position tomorrow, this week coming up with, with price action and signal and confirmation. So as you can see, price opened up and it has not, this is acting as support. It has not gone down my, into my demand zone yet. I'm going to go down to a lower time frame so you guys can see what's been going on. So let's take a look at it on a smaller time frame. We're going to zoom all the way in. So this is a 5-minute time frame. Price opened up, gap down, and again, the futures market is open right now. So you are seeing these prices as they move. It gapped down, and it tried to come into my demand zone, but what happened, this demand zone pushed it up, and then what do you see here? This nice pin. I told you about this pin. So the pin formed, and now buyers are trying to push price back up into the gap. So we'll see if they can be able to push price back up into the gap and see what happens. Even on a 3-minute time frame, you'll be able to see all these, another inverted pin. So I like this. So this is Dow Jones Mini. And I'm going to show you guys SPX next in the next video. Again, if you want to see more charting, if you want to know how to chart, feel free to click the link in the bio. And Instagram, follow me on Instagram, subscribe to the YouTube, and make sure you press the subscribe button or the button that says notify me. That way when I post any type of new video, you'll be able to see it. And I'm also running a special for anybody who want to learn how to chart, for me to walk you through how to look at these zones and even show you guys how it works while the market is open, how to trade. Let me know. Go ahead and book a call on my calendar. You will see that in the link in my bio. I'm going to see you in the next video.